Ladies and gentlemen of the crypto space, we're live on a Monday, February 3rd at 11:31 a.m. So you just experienced yesterday, a Sunday, a weekend, and we see the equity indices open this morning, and we see the headlines, we see the reports from mainstream media, obviously we see our social media, and it's like, um, probably shouldn't have done much yesterday, or probably should have been in a better position yesterday. And what is that position? To withstand volatility, which is the exact conversation we've been having for years at this point. And look at the chart. The chart screams exactly what we should always be prepared for. Extraordinary volatility, just giant wicks on Bitcoin, but frankly, it's high or low, even from a giant wick standpoint. It's up and to the right. This is merely a 100 mean regression on the daily. That's it. You know, it all goes up and to the right because the global money supply goes up and to the right. And it's not even just the global money supply. It's not, because you have to understand that even if the global money supply contracts, you have market to market capital rotation. It's $217 billion in the crypto space, up and to the right. And if we want a little bit of a more real-time inspection, we look at Tether and USDC, the predominant money supply. Exogenous, we want the endogenous version, but that's another story. It did dip in January, but so far, what is this? Why is it? Oh, no. It's 2nd of January until the 15th in January, and now it has been up with a nice spike actually today. Go figure. I mean, look at that. That's a bit of an outsized candle of late. It's the large, well, it's got to be the largest money supply increase since, oh shit, November 24th. That's an interesting precursor to a significant rise in money supply. These are big rises in money supply. These are hundreds of millions of dollars, 0.19%, $258 million. So what's $258 million in the grand scheme of things? It's basically nothing. It's a drop in the bucket. You could have a reallocation of 0.0001% of a GDP of even a relatively small nation, and you get a couple $100 million. So the point is, the reallocation of trillions and trillions of dollars of capital in the global financial system, you don't even need a small bit. You need a microscopic bit of that capital to be like, oh, these are enterprise. These are real companies. This is real revenue. And then you get significant rotations of capital into an emerging market. And what's the playbook? The playbook is the way emerging market investors historically thought. And emerging market investors used to look to, well, relative to the US, India, South America, Africa, Southeast Asia, so on and so forth. And now there's more markets. There's more emerging markets. So the capital rotation is still the inspection to make. That's the takeaway. Everything else is noise. We're at 99,000 for Bitcoin with a giant wick down to 91. 91. 91. The ETFs launched at 47. If this was years ago, yesterday would have been a very busy day for me. You probably would have been thinking about what to sell and what to buy, or panicking about net worth. But that was the goal this whole time, to redefine how to engage with these markets, to let time pass and let these assets get monetized like they're going to be, because businesses that are profitable get monetized. Businesses that offer a product and service that's in demand get monetized over time. Now, Bitcoin isn't necessarily part of that narrative, And altcoins are significantly underperforming compared to Bitcoin, but that's still the reality. So at some point, the monetization of crypto fintech, the part of the altcoin space that isn't stupid, gets monetized just as any emerging market would get monetized. Bitcoin's on its own trajectory. It's an entire narrative unto itself, which makes sense, and that's fine. It's it has its own momentum, its own entrenchment, its own lindiness, so on and so forth. And its entire adoption, as discussed by Michael Saylor, so on and so forth. So don't conflate the two. And you cannot say Bitcoin, altcoins, Bitcoin's more important, altcoins more. What you have is a portfolio. What you have is something that you own. That's an expression of who you are, what you understand, what you believe in. And that portfolio has a construction. It has components. It has weights, position sizes. How do you size the different components of the portfolio? Cash, which includes stablecoins, dollars, and a Bitcoin, for instance, and basically everything else. Investments that produce cash flow to add to the cash part of your portfolio. So this is not a day that we need to necessarily talk about that. This is maybe actually more of a day that we'll talk about politics. But even curve, there's a daily 200 mean regression. Daily. There's not many moving averages out on the weekly, certainly not on the monthly. It's too new of an asset. But this is where we are, meaning we've had our significant uptrend since November of 24, going on 3 months, and this is the retrace. So if this is the prevailing directionality, this is a mean regression. Mean regression on an uptrend, a break in invalidation of the significant downtrend that we experienced over the past years since 2020, end of 2021, 2022. It's a hell of a bottoming pattern. If anything, somewhat of an inverse head and shoulders, albeit this is a daily chart, so it's just clouded with noise and multiple wicks. So maybe this is a neckline. But to me, this chart looks lovely, and it tells us the direction. Even spell back above 0.0010, back up to 0.0011. It was up at 0.0018. That was wild to see. Gold. This is your signal through the noise. This was a breakout. Signal through the noise. Everything else is noise. Do I need to advise folks to listen to Raul? I mean, that's not what I do, but that's what a lot of mainstream folks do. And that's not a bad thing. I see his shorts on YouTube. They're motivational, uplifting, all that stuff. He has a good story. But that's real. What he says is the case, which I completely agree with. So there's a couple of posts this morning that really starts things off very interestingly. So the first post I saw was that Mexico is deploying troops to the border. We'll see what they do, but clearly under threat of tariff, they have responded and responded exactly the way the administration wanted them to respond. And the biggest takeaway from this post was probably this post. The Kobayashi letter is great content, great content. But it set a great precedent. It said Trump doesn't really give a shit about the deficits. I mean, yeah, that's a big deal. Hence the last word in that sentence, deal. You know, there's always a compromise. The whole point is a deal, an arrangement. All right, fine. You got a couple $100 billion in trade deficits. Yeah, we probably want to close that gap, but we have a whole bunch of other shit that we need to do from a nation state perspective. A whole host of things that need to be resolved. And that is exactly what this post talks about. I'll put it here in the comments for you guys. But here, the president is making clear that his objective with tariffs is to obtain a deal. I mean, isn't that the whole statement he always makes? The art of the deal. So put pressure on, get a freaking deal. They have no leverage. Mexico has no leverage. We're the consumer. Canada has no leverage. They're putting tariffs back on us. They are 1.8% of our GDP. They have zero leverage. So what was it that Ottawa said? Uh, is not optimistic of a real off-ramp from tariffs for Canada the way it materialized for Mexico. All right, no, there's a lot of noise in the statement. It's just a quick headline post, but the point is, it's a deal. Get to a deal. Deal. You sit down with the teams of lawyers and bureaucrats, and you come to an arrangement, and that's exactly what the Kobayashi letter was talking about. So nothing has changed whatsoever. I'm more interested than ever, if not borderline excited, about the way the market looks. Yesterday being noise from a volatility standpoint, but that is irrelevant in the context of the rules. The rules are very simple. You have a portfolio, you've chosen what to own, not a position, but you own. That's an expression of who you are, and that's more meaningful than anything. Have you chosen well? If you've chosen well, let what you chose play out. Your choices were made based on a foresight of the future, not a year ahead. Check back in 2030, but it's not like don't look at the market between now and 2030. You have to understand the market. You have to understand the reality of what we're doing, what this is. And you have to understand the difference between a path and a destination. You have to understand the way the system works, because that is the only way to be comfortable. Because your goal here is obviously financial, but it's also, there's no point in having financial goals without also being comfortable. So your goal with education and learning and acclimation and assimilation of all this shit is to eliminate anxiety. You should have no anxiety. I think last night I sat on the couch because what's the options? What's the choices? Do I sell? No, that's not something on in consideration. Do I buy? All right, that was a consideration. I'm like, how healthy is the cash position? Okay, it's I was not in a position to acquire because I want the cash position as a part of the portfolio to be effectively sized as compared to investments. You need a healthy portfolio. With a healthy portfolio, you have peace of mind, you have comfort, and you won't have anxiety. So this shit is exciting. Listen. So if we consider yesterday completely noise, look at this. Not only has nothing changed, the narrative is just exciting, as I've said. So tomorrow we get David Sachs talking. Today we get the Treasury Department talking about refinancing. Clearly the debt limit is on the table right now, and we haven't issued debt, and the TGA has run up, RRP has run up, there's been liquidity getting drained of the system, and we've had these headline complexities with the deals that Trump wants to make. This is the perfect storm of awesomeness, in my opinion. So rather than getting panties in a twist, I see all this stuff and I'm like, oh, goodness gracious, this is awesome. It just really is. At some point, if the debt ceiling isn't resolved, the TGA gets drawn down. Which means, and then when the debt ceiling is resolved, they're going to issue more and more short-term debt instruments rather than long-term. That's going to drain the RRP. And there you go. RP drains, TGA gets drawn down, more debt, more collateral in the system, more currency gets printed, especially as moves at 91. All this is occurring with move at 91. 10-year got bid. Interesting to see. We'll see if that's a support or it breaks to the downside. I hope it breaks to the downside. Then I would expect move to come down even further. The move gets below that 82 line. Hey, that's going to be a very interesting time for everyone. Okay, that's the roundup. That's it. So there's not much else to talk about with regard to yesterday. The volatility event, there was liquidations at the bottom. The move on Ethereum is massive, 25%. Crazy liquid. That shows that it's a collateralized instrument. So that's the takeaway. People are using it as collateral, and they're clearly taking too much risk. So you could consider from an an investor standpoint, all right, how do I get that money? If people are taking, so that's the source of yield. Folks don't understand. If you don't know the source of yield, that's a true statement. You're often the yield, but when the yield is a result of other people taking risk, that's a business because you're obviously offering a product or service. So that's what leverage is, and that's what dollar liabilities are. So I expect outsized receipts this week because of the risks that people have taken, and that resulted in their financial loss and cash flow in the form of revenues for businesses, and those revenues get distributed to the business owners. Pretty simple. I mean, Bitcoin's at 99,000. It's reinflated. It's like yesterday it's a blip, literally a wick. Complete. That is just a massive, massive wick. What did they say? You said the only thing that's comparable to yesterday, maybe, the amount of liquidations I've heard, like Bybit and whatnot. You're talking about a March of 2020 liquidation event, but it was different, and that was another big takeaway that makes me even more excited. How can I get even more excited? So we watched three new protocols since 2020 that came online between then and now. Let's say obviously Liquidity's brand new, V2, Money's brand new, and CRVUSD is like 2024. I think it was launched last year, and they didn't budge. This is the epitome of the most incredible product I've ever seen. Incredible investable financial product I've ever seen. These products are designed to be a dollar based on very novel implementations, and they did that. This is validation of a crazy, crazy technology that is brand new. Years ago, or even not so years ago, we saw stablecoins a disaster. Even what's going on with Rune is a disaster. So the capacity to manage credit, to manage liquidations, to manage the collateral during the liquidation process, and to top it all off, manage the value of a liability, a dollar liability. There's only one word: extraordinary. This is what has me excited, and these are the three protocols that are most interesting. Frax is on the radar too, but that's a different story, completely different story. These are the most interesting dollar primitives I see across the entire crypto space. CRVUSD, Money, and Bold. Now, yeah, they got the derivatives of Bold and the 15 friendly forks. We'll see what comes of that. This is all brand new. It's all in a sense, so whatever. We could speculate all we want. Let's go through some commentary. Maybe we keep the stream short. What else is there? It's pretty simple, not complicated. Good morning, rational people. Fugu in the house. Much pleasure. Mix. Hello. Good morning, Captain. Much pleasure. Good morning. Connect the dots. Be an owner. Let them come to your business. That's as simple as that. That's it. So then the other part of the equation, the hardest part, is acquisition. Cheapest price as possible. Are your investments priced lower than where you bought them? So probably some of the newer stuff that we've acquired, but not the older stuff. I mean, Curve is down to 20 cents. It's at 50 something cents. It's over 150% higher in the year. And that was last year in November. It's only a couple months, Jesus Christ. Okay, so the point is, everything else is noise. Acquire at the cheapest price possible, and you're done. You're done. You're done. You no longer have that money because you spent it. You bought something. It's gone. It's like going into Best Buy and buying some shit. You don't have the freaking money anymore. So if you treat investments like that, it simplifies the equation. And then the question becomes, how much time? How much does it pay? Now, frankly, XYZ comes into the picture as well. But how long? It's irrelevant. Time's irrelevant. You can't sell the assets. So the time is irrelevant. So your entire exercise is to achieve mental stability, allowing time to pass. Excuse me. Choose one of the five main on-chain industries. That's it. There's only five businesses: credit, foreign exchange, credit, derivatives, um, liability printing, and liquidity financing. So my job, for myself and my family, and in talking to you, has been to simplify all this insanity. And I hope I've done that. I've done it for myself, but I try and tell the story over and over again, and hopefully more folks will appreciate it in years to come. It's only five businesses. So who's building these five businesses? And then obviously the other complexities to the conversation. And you have to be able to tell the story. Because then if you can't, then you don't understand it. Then it's just a token and a price, which is literally is exactly what's going on in like Asian Rational's Telegram group. I mean, it's literally not one person knows of. I mean, I think Fugu, you're in there, but nobody, not a single person bought the token because they knew of me, Captain Rational. I don't understand. I literally, I just, all right, fine, maybe launching a token. I didn't really think of it because I'm biased by my mindset. I exercise extraordinary due diligence when acquiring anything, when spending any money. So it didn't come to me that people would buy something without knowing what they're buying. So that's the last reason to buy anything. A token and a price. The token's going up in price. What the fuck? All right, so that's gonna be a shit show over there. It is what it is. Call it a day. Nice and simple, right? Nice and simple. Well, what are we gonna dwell on? Oh, price is down, price is up. I don't know. Pick a meme. I know that's not the conversation we have. You know the deal, my man. Good morning. How are you, my friend? Hard game, hard to let news feed other concerns get in the way of taking advantage of bloody days. Okay, so this is the point of the cash position of the portfolio. Let's say you have 100 grand in investments and you have 15 grand in cash. You don't have 115 grand. You have $15,000. That's your bank account. That's your savings account. That's everything. You have nothing else. The number of net worth is meaningless. That money is spent. It's gone. You went into Best Buy and you bought shit. Well, not shit. You bought good shit. You made choices of what to own. And those things you bought are going to serve you well this week. It's going to be a good week, Wednesday and Thursday. And they will pay the week after. They will pay the week after. They will pay the week after. They will not stop paying because the code is immutable for many of the things we own. And immutable, I mean, it's a basic blockchain concept. They can't change. They exist in perpetuity. So it's everything. So nothing else matters. So it's kind of like it's really the Serenity Now prayers. You can't change anything. You can't do anything. It's just not something to think about. So it's kind of you have to train your mind to be like, what is relevant and what's not? What is real to respond to? And let's say 15 grand cash position, 100 grand in investments, and your 100 grand's now worth 75, 60 grand. How much money do you have? You have 15 grand. See what I did there? You have 15 grand, 100 grand. Your 100 grand's worth half a mil. Now you have volatility, or half a mil's down to 150 grand. How much cash do you have? 15 grand. That's all the money you have. Your money is not net worth. Net worth means nothing. It's the cash that matters. Any thoughts on how last night's liquidations will affect this week's staking awards on Contango? Short, long-term effects. It'd be nice if this is updated within the last couple hours. Let's see if we're lucky. Let's see if we're lucky again. Oh, 37 minutes. There's $450 million worth of open interest on Contango. Um, Next week should be nice. Next week should be nicer than this past week. Um, Albeit considering the depreciation in price, there's probably going to be some dilution, which is a consideration, but that's not something I'm factoring in. I don't, the position size was effective. I don't really mind the depreciation, and I don't feel a need to add. It will be what it's going to be and will continue to pay. Now, obviously, it's not the rock solid industry tested curve finance. And I don't know how immutable things are, but thus far, considering the position size, I'm quite satisfied with the cash flow it's been producing, and I expect it to continue producing cash flow. I don't see any disruption. I think it's a relatively simple protocol. It's, obviously it's mostly architecture. It's not like there's significant tokenomics involved, um, meaning it's max looping. All right, so just add more access to max looping. So basically, they need to find a protocol that offers credit for a particular position, derivative, LP, whatever, and then they are just a facilitator of max looping. So they are a derivative product, Contango, and they provide a service. Either you're investing in a product or a service. Contango is a decent example of a service. Product is a dollar liability. It's a CRV, a USD, or a bold. I mean, a product, I guess, is someone who produce LP positions or a product, a derivative of to a degree, potentially collateralizable in the future. So that's a bit of a gray area distinguishing between a product and a service in crypto terms, but it's either one or the other. A little bit of a blend of both at times, but the point is, it needs to be a product or a service, and that happens to be Contango in this instance. Say, Katsu, how are you, my friend? Hope everything's well, dude. The ChatGPT Pro, the new feature is insane. The deep research. Holy crap! Yeah, it kind of changes everything. Anyhow, I digress. I digress. Kingdom Unite. Kingdom's pretty good. Um, Obviously, Ramses is lagging significantly. Wasn't much volatility in Ram, so there wasn't much revenues yesterday. But Nile and Clio happened to do very well. So as I talk about every component of what's owned that produces cash flow, you got ups and downs. Meaning there was a time when Ramses was significantly outperforming Nile, but nowadays, I mean, Nile and Clio are actually beating the pants off of Ramses. It is what it is, and I find it interesting. It's how I talk about like cash flow from, or I historically talked about cash flow from Vote Market and Vodium. I expect them to go back and forth, especially into the future as Convex regains some traction. Vodium will go up, and it's about the capital efficiency of the rentals, and that should vary over time. It's more efficient for voting. It's more efficient for vote market, up and down and up and down. What goes up comes down, so on and so forth. Anyhow, hey Noah, what do you think about hype? Thanks, Gabriel. No interest. You know why I have no interest? Because too many people have interest in it. What, GMX? Pick a perp market. They have their own chain. They got a lot of hype. I don't want to own something that's inflated. I want to own something right now that's deflated. Something that's real and quantitatively real, and just folks don't understand it. And that's what I like to own because then it becomes appreciated. Whereas hype didn't experience much volatility. That's not what I want to own from an investment standpoint. Um, I'm not too fond of it. Uh, how much cash flow does it produce? How much does it pay? What's the XYZ? How much does it cost? How much is it paying? And how likely is it to continue to pay? Is there cash flow from the protocol? There maybe is, but isn't that kind of like a GMX? You're just getting cash flow from perp trading fees and liquidations and whatnot. That's not my favorite form of cash flow. I've been most fond of dollar liabilities, and I will continue to be. It's the biggest business on the planet, the creation of dollars. And that is the least understood concept in finance, yet alone crypto markets. But that's the reality, that crypto markets have reinvented the concept of creating dollars and how that works. So really the precursor there is to understand how dollars are created in traditional finance. That's not something for a conversation today. So that's my preferred investment scope and focus, and what I prefer to own, and what I think will outperform over time. And how much time? It's irrelevant. Feels like Ramses is being blocked from being embraced by Arbitrum Foundation, partially, but also Arbitrum and Optimism took a fat hit. I think a lot of this capital went over to hype. Um, That's a massive reduction in available capital, 2.742. Solana has taken the spotlight for a bit. Massive inflow of dollars, 11.69 billion. This is now the second largest dollar supply in the entire crypto space. For a while, that was Binance Smart Chain, but Solana has significantly trumped Binance Smart Chain. Optimism has taken a fat hit as well, down at $1 billion. Very small optimism, and obviously all the other optimistic super chains are even smaller. But there's only one king. Almost all money is on Ethereum mainnet. Folks who love meme coins and that kind of gambling um, certainly don't appreciate that reality. $117 billion on Ethereum mainnet. Nothing, no other market in the crypto space compares. That's where the money is. That's where the opportunity is. Now, obviously, that will bleed over to Arbitrum, Optimism, the super chains, the Arbitrum Orbits. It bleed over. It has bled over into Solana, Binance Smart Chain, Base, so on and so forth. Sonic will get the heat. Everything will get the heat, but that is a consideration for where to invest. Depending on the size of the portfolio, you may not be able to execute on mainnet, so you may have to wait for an Arbitrum an Optimism to catch the bid, and then that triggers the capital rotation from mainnet to other destinations, and that's okay. The number one rule, well, there's a lot of number one rules. Respect the portfolio. You have to respect how much capital you have. The second you try and overperform and do more than what the amount of capital you have is capable of, that's when you're entering excess risk territory. And that more often than not results in capital loss. It's just very important considerations. The number one rule, yet another number one rule, is to survive, because with quality investments, crypto just goes up and to the right. Well, at least the quality investments in these crypto markets just goes up and to the right over time. Timothy, my man, how are you? Good morning, Cap. Thoughts on compound? Until something meaningful occurs, they're irrelevant. Um, in the context of Aave, they're irrelevant. Aave is just a titan. They are massive. Aave dominated compound a long time ago, but they got $32 billion, $32.5 billion in deposits. This is basically the pinnacle, or the expression of banking in crypto. This is what is overwhelmingly accepted as the crypto bank. Little compares to Aave. I like their user interface. It seems like Liquidity V2 drew a lot of cues from Aave in their palette and structure of UI elements. $164 million and billion, nothing compares to Aave. But from then, that's an inspection to make from an investment standpoint, and sizing and cash flow. And it's not the best cash flow until there's like a fee switch or whatnot, but that's a speculative cash flow. So got to take that into position size considerations. Um, so just Compound has nothing on Aave. Aave is the leader of crypto banking by far. So obviously, Compound was the original crypto bank, but they kind of made a mess of things with what was it, Humpy, who dominates Balancer as well. So that gets just complicated. So I don't want that complication. What Mark Zeller just says, just use Aave. You can't say it any simpler than that. Marco Polo. Do you use Meteora's pools, and if so, what's your outlook on that team platform post airdrop? No, I do not use Meteora. Honestly, never heard of them. Maybe vaguely heard of them. Mostly not interested at all. You know what I'm interested on Solana is Solve 3 when they come out. No, I'm not interested in just liquidity pools at all. What I'm in, look, it's Army and Raiders and Shilling and no, I don't want any of that. I'm more interested in a VE33 on Solana because I think that just is more consistent with what I think the market wants and needs. And this literally does the same thing as I don't even know the damn exchanges, Jupiter. And for instance, you go over here to volume dexes, Solana number 2, obviously. Actually, much more financial activity on Solana than mainnet, but that's another story. But Radium and Jupiter. But there's no, what's the cash flow? Let's take a look. Where did Meteora go? Nope, that's Aave. Let's take a look real quick at the user interface. Nice branding. What we do. Vaults farming, no interest whatsoever. Pools, no interest whatsoever at all. Where's the zero interest in meme coins? Is there any cash flow? That's cool. That's cool, but who gives a shit about meme coins? So, whoopie do. That's cool. We've seen this in a couple of chains. Solidly did this. There was a bunch of other protocols that did something like this. So this is hot. Not gonna lie. That's it. There's nothing interesting. It's just LPs in exchange. Frankly, in that regard, it's boring. There's no staking. There's no cash flow. There's no protocol token. No, zero interest whatsoever. That's that. Um, that's it. I think we keep it short today. Keep an eye on the headlines. These market headlines are wild. I mean, this is today. Came out at 3 o'clock on October 28th. So, maybe in the afternoon today, in a couple hours, we'll see some headlines from the Treasury Department. And tomorrow we get to see what David Sachs talks about. I mean, literally have a czar in government now that is tasked with effectuating success and consumption and adoption of these crypto markets. I mean, literally everyone sees this volatility and they're like, who's at the top? The freaking government wants to be the leader in crypto. Oh my God. All noise, all noise. Okay, maybe that's interesting. Okay, so when it comes out, I'll assess XYZ. And the assessment is how much does it cost? How much is it paying? And how likely is it to continue to pay? Well, if it isn't launched yet, you have no idea how to assess Z. There's zero lendiness. We'll assess, well, maybe it's 10%, 20%, 30%. All right, that's cool. How much does it cost? If that thing launches at $1 and it runs to $10, don't pay a premium. For something brand new that doesn't have an established Z factor, so you get it as cheap as possible. And if you can't, then you can't get it. So that's the methodology. So It's as simple as that. So you can't force a position. Forcing positions are what kill people's portfolios. So like yesterday was a good day to acquire cash flow businesses. Um, Not necessarily today. Things are off the bottom. The opportune time was really in November of 2024 to build out the portfolio, not even yesterday and the volatility event. And that's the bottom line. I'm just not interested in new. Obviously, I guess liquidity V2 is new. Cash flow isn't great from a liquidity standpoint, the liquidity token. From a bold standpoint, that's great. That's cool. And if you're getting 15, 20% on dollars, that's pretty cool. But that obviously requires a significantly large cash position. 20% sounds nice if you have a million. It doesn't sound so nice if you're applying $1,000 and you get $200 a year. Um, so new is not interesting. The reason liquidity is interesting is because it's not necessarily new. It's an iteration of an established protocol that had shortcomings, no failures whatsoever, and they ring true to one of the most important characteristics of a crypto business: immutability. It cannot be changed. It cannot be turned off. There's no governance. There's no that eliminates so much risk. It's extraordinary because once a protocol proves itself as resilient and a capacity to withstand volatility, and it's immutable, that means it's de-risked. That's crazy. And that, my friends, in crypto terms, is what changes everything from not only a financial system perspective, but also from a capital management perspective. On that note, we'll wrap it up for today. That was a quick one. Hey. 12:13 p.m. on a Monday, February 3rd. 249 people made it to the end of the stream. I appreciate each and every one of you, and hopefully together we are all a little bit more rational because of it. I will see you guys and gals later this week. Until then, keep your heads on a swivel. Keep an eye out for some good headlines. I expect good headlines. And stay rational. Until then, peace.